Good morning and welcome to the Saxo Bank Morning Call. It is Monday, March 18th, 2019, and we have an interesting start to the week here. Also an interesting close to last week, but let's start with the Chinese session. I've got a chart here showing how the Chinese CSI 300 off to a roaring start. We've got a piece out later on this gateway to China talking about how Chinese markets are opening up, and this is bringing in the interest in capital flow into China. This is the best session we've seen in quite some time and getting back towards the high. So pretty interesting there. Seeing some of the other Asian markets following suit, although we have noted that key exporters like South Korea not quite or not even very near those cycle highs. So that's a pretty interesting development out of China to start the week. As well, I'll transition straight to the S&P 500 where we're seeing that after that quad witching last week, we are at and above the highs for the cycle. I do note the divergent momentum there at the bottom of the chart with the MACD. That only means something, I think, if we sort of pause and start to turn back around. But I think an interesting test for markets this week with the FOMC. This is a big week with the FOMC up. These will be the first forecasts we're seeing since that December meeting in terms of the dot plot, et cetera. We'll get to more on that in a moment. The thing that I find the most confusing is, okay, we're fine. We've got very strong risk appetite. A lot of that has been driven by the turnaround in the Fed towards the more dovish side. But it's hard for me from an accounting standpoint to see how we can continue to go higher and higher in treasuries, lower and lower yields, and seeing the strong risk appetite. So you see here the 10-year future. I've got a chart here showing that we're towards the low yields of the cycle all the way across the yield curve in the U.S., and that is a key element to what is going on this week, as well as we're looking at whether these yields can continue higher. I have a hard time seeing how bonds, in other words, and equities can both be strong at the same time. Very confusing development. And then if we look at, actually I'm going to transition to your talk about this XOP, this oil future in the U.S. We see the diversification in the petroleum fund in Norway, and we're seeing oil prices still at their highs, but the underperformance there in the XOP.
Absolutely. I don't know if it's possible to show the chart, but I think there might be some technical issues on that one. John is just restarting it. Yeah, so what we're seeing actually now is we had another strong week last week in crude oil. We finished near the highs. The market is obviously still looking towards OPEC to cut production. There's a meeting today in Baku where the OPEC Plus group is going to meet, and basically so far is they're going to stay the course because at this stage Saudi Arabia still sees the market oversupplied going forward. But what we also seen, interesting enough, is that one of the big oil ETFs, the XOP, the oil and gas explorations, they have actually been struggling to keep up with the rally we've seen in crude oil. And there was some news this morning that the short interest in the ETF is now equaling around 35%. So while oil is going up, we're seeing one of the major oil producing ETFs basically seeing an increased short interest. It does, okay, here we are, and that's just the two charts, and you can see the bottom on the right, the bottom left graph is basically the performance year to date of the XOP, 12%, but we got WTI up by nearly 27%.
Great. We do have, it looks like we have our charts back. So I just want to briefly show, I mean, we talked about the Treasury future. I wanted to talk about the dollar. We have the dollar actually heading quite weaker here. We have the euro dollar that last week was all about retracing that breakdown we saw in the ECB, or post-ECB, the dovish ECB, engineering that break lower that was then just slowly unwound. So we're back to neutral. You can see a descending trend line. Some would argue there's a channel going on there. A pretty weak performance heading into the FOMC this week. And this week we'll be talking about what are we expecting from the Fed? I think the market is looking for something on QT. That is the first step in a further easing process. As well, the dot plot will be in focus. Again, this is the first time we see the accompanying materials from the Fed, their thoughts on the economy and their forecast for Fed policy. How much is that dot plot lowered after the very significant shift since December? And then the irony of this shift coming as we're seeing, raging bull market back on line in equities. So an interesting setup there. And we see euro dollar has reversed here. We see a lot of the other dollar pairs as well having reversed a bit. And I think danger of further downside if the Fed is quite dovish here, especially with the backlight of risk appetite.
I suppose also this time around they can use this the weakness we've seen in some of the prices recently. The CPI came in lower than expected. Use that as a reason for being more cautious. So not only the growth is one thing, stock markets rally, but potentially the prices could give them that window opportunity to lower their forecast.
Yeah, and I think as well there's this whole scrambling to say, well, we need to have some catch up in inflation, not just around 2%, but because we had such a long period below 2%, that we can actually allow it to run a little bit hot. Anyway, that seems to be the setup. It looked like we'd have a stronger dollar, but I think the Fed is going to have to really surprise the markets to get the dollar back in a strengthening trajectory. Other currency I want to talk about this week, we have a lot going on the calendar. We'll get to the calendar later, but the Norwegian krone is interesting because the Norges Bank is the only central bank really among the G10 currencies where we're talking about rate hikes, and they are expected to hike this week. We have Euronoki getting that message from the CPI, a strong CPI, from a strong region survey, from Ola. We talked about the strong oil price, so we're seeing a stronger NOK. And here's Euronoki. Again, you can see this reaching really big levels, 965 area and that 200-day moving average. I don't see how they deliver anything that sort of discourages a stronger NOK as long as we have a backdrop of stable to higher oil prices and reasonable risk appetite as well. Now, let's talk about Dr. Copper. Everyone's worried about the state of the global economy. Supposedly copper an indicator, a forward indicator on things, and it really never, since this year's lows earlier in the year, it's really come back strong.
It has, and we were looking for some correction here in recent weeks. We have had a small correction, but it hasn't been that great. And as you can see on the chart here, we're still holding above the breakout area, and now we're probably going to see the golden cross, which is when the 50 crosses the 200-day moving average. It's probably going to attract some attention. We've seen it cross already on high-grade copper. LME copper is about to follow suit as well. I think it's primarily something that it's a headline grabber. I don't know the historical how good they are historically, but at least that could potentially just provide some additional support. And also, as John showed here in the beginning, the Chinese market seems to be on fire still, and that's really where the demand should come from.
Yeah, and I guess talk as well that the 5G, for example, is another copper-intensive enterprise as well. Now, finally, on the agricultural and the commodities front, we're talking about agriculturals. Some very bearish fundamentals we talked about recently in the grains markets, but they're not really cooperating.
No, what we're seeing in the weekly cut report, which came out on Friday, I'm going to put out the report in a couple of hours here on home.saxo. You can see the highlighted blue areas, the net shorts. Basically, out of these key agricultural commodities, we only got small longs in two of these contracts. So, and especially the grain sector. On the right, you can see the combined net in corn, wheat, and soybeans, and you can see the highlighted the circled area. It's the biggest short for this time of year, and it's coming just ahead of the key season where we start to see the planting intention and spring weather and so on. So we did see the first sign of short covering last week. Wheat had a bit of a surge. Actually, corn and soybeans all climbed higher. So just be aware that there is a big short out there. Any continued improvement on the fundamental side could trigger quite a bit of short covering.
All right, let's get to our economic calendar for today and the rest of the week. Ola, you have this OPEC Plus meeting ongoing. Started over the weekend. Anything there briefly before?
Only that it's going to be creating potential some headline risks that the market will be looking for guidance. But Saudi Arabia has already, as I mentioned, been out over the weekend saying that it's too early to talk about stepping back from the cuts they currently have. Also, I think they're given a bit of a signal to Washington that they are not prepared to react to any sound bites from in regards to Iranian sanctions. They really want to see the impact of sanctions before they potentially start to increase production to offset any losses from Iran.
All right, and it's a Monday, so we're a generally light calendar. We have Australia out, but that's really the Tuesday session. RBA's Kent out speaking in the minutes from the prior meeting. But the highlights this week, obviously, the FOMC meeting, number one. Number two, we have May's Brexit deal, the deadline there. This is crunch time. This is her last chance, I think, for salvaging her leadership of the government is getting this deal passed. Apparently the chief focus on the DUP and whether they will cave, and there's all this legal analysis of the latest wording on their attempts to revise the deal to favor at least some negotiating period and good faith on negotiating over the Irish backstop issue. So there may, after all, be a chance for this deal to pass. That is the key question. If it does not pass, if it does pass, I should say, I think this would be highly sterling positive for the near term because it clears up or clears away all that uncertainty in one swoop. Now, if it doesn't, and I'm not sure the odds favor it passing, if it doesn't pass, then I'm not sure there's a big catalyst there because we have a long-term delay, most likely, and that leads to further aggravation of this uncertainty. And it's not necessarily a sterling positive, even if way down the road it results in a reversal of Brexit. But let's get back to the calendar. We've got Bank of Japan meetings, meeting minutes on Wednesday as well. Thursday, we have two central bank meetings I don't think will be big catalysts, S&B and the BOE. But as we mentioned, Norges Bank expected to hike rates and other bits and bobs throughout the week to distract. And interesting, I think, to highlight among those would be the ZEW survey from Germany tomorrow, and then the flash PMIs out of Europe to get a sense of whether there's a little bit of a bounce after that terrible slide in 2018 in the Eurozone economy. That'll do it for us today. We apologize for the technical difficulties. We'll try to get those sorted out, and we'll be back tomorrow with the Saxo Bank Morning Call. Thanks for joining.